So now that we have the trial balance columns filled out and the adjustments filled out, we now need to complete our adjusted trial balance columns, which just means we're going to take the original data we had, and for cash it's 4,800, and then add or subtract depending on if it's a debit or credit, and then bring over the new total. So once we complete that task, we will use the adjusted trial balance columns to complete our financial statements. So here we go. This is what your worksheet should look like. We've got our trial balance and our adjustments column filled out. So now let's update our new balances. Take one row at a time. Cash, we had 4,800. We're not adjusting it, so we obviously still have $4,800. Now, accounts receivable, we had 2,200. This is an asset, so a debit is the plus side, and we're going to debit again, so we're going to add that. So our new balance is going to be 2,500. Then we're going to work our way down to supplies. We had 700, and then notice we are lowering it. So because supplies is an asset, if we're crediting it over here with a 500, that means we're lowering it. So that means we're going to take the 700, subtract the 500, and that gives us our $200 balance that the adjustment information told us. Remember, the adjustment information said we went to the supply closet and we found that we have $200 of unused office supplies. So this is the adjustment, the $500, and the $200 is the ending balance. Furniture, we had 18,000. We did not adjust it, so we still have 18,000. Accumulated depreciation. Now remember, this is a contra asset, so the plus sign is on the right side. So we had $1,000 from the previous period. We have $1,000 more, so we now have $2,000 of accumulated depreciation. AP, we had 7,200. No adjustment, we still have 7,200. Salaries payable, we had zero balance. And I remember, salaries payable liability increases on the right side. So if we put $100 over here, we are increasing it. So our new balance is $100. Now, unearned revenue, remember, this is a liability. This is where someone paid us ahead of time for something we did not complete. So liabilities increase on the credit side. And over here, notice we are debiting it. So that means we are lowering this liability. So $600 minus $200 gives us a new balance. Now remember, the bigger balance was on the credit side. So the new balance of 400 is going to be over here on the credit side. Capital, we had 13,200. We did not adjust it. We still have it. Withdrawals did not get adjusted. We still have 1,000. Service revenue, we had 6,000, and notice we credited it. And remember, revenues increase with the credit. So we credited $500, a total of 500. So our new balance is 6,500. Salary expense, we had 900. We increase it 100 more, so it gives us 1,000. Supplies expense, we had 0. We increase it 500, so we now have a 500. And depreciation expense, we had 0. We increase it by 1,000, we have 1,000. Utilities expense did not get adjusted. So now what we're going to do is we're going to add our debits, put the total here, and add our credits, and put the total here. So our next task is to take the adjusted trial balance columns, the information from these two columns, and we're going to move them over to either the income statement columns or the balance sheet columns. So let's move over the accounts to the balance sheet columns. So we have to remember, well, what goes on the balance sheet? And to know that, you need to know the formula for the balance sheet. So the formula for the balance sheet is assets equals liabilities plus owner's equity. So that means we need to bring over the assets and the contra assets. And in this case, that happens to be from cash through accumulated depreciation. Remember, accumulated depreciation is a contra asset. It's opposite the furniture account, since it's showing that the furniture account is slowly wearing out over time. We also need to bring over our liabilities, which is AP, salaries payable, and unearned revenue. And then we bring over our equity accounts, and in this case, we'll also bring over withdrawals. So everything color-coded over here, assets, contra asset, liabilities, and owner's equity, these will be moved over to the balance sheet columns. That means the rest, revenues and the expenses, will go on the income statement columns. Why? Because what's the formula for the income statement? It's revenues minus expenses. So here's our revenue, and here are our expenses. So let's go ahead and transfer our revenues and expenses to the income statement columns. Now on your worksheet, the income statement columns would be right here. We didn't have room to show them all on the PowerPoint. So notice here, we're now looking at the worksheet. We got our adjusted trial balance columns, our income statement and balance sheet columns. So what we've done is we've taken the $6,500 of service revenue, moved it over to income statement columns, because the income statement is going to contain revenues and expenses. So we shift over our revenues and shift over our expenses over here to the income statement columns. That means everything else has to go to the balance sheet columns. So we're going to move cash, $4,800 over, and move all these asset, liability, and equity accounts over here. So what this means is that each account is going to go either on the income statement or the balance sheet columns. And you figure that out by knowing the formula for the income statement, revenue minus expense. And then you need to know the formula for the balance sheet, asset, liability, and then the equity. And then we're going to total the income statement columns, debits, total debits, place it here, total credits, $6,500, place it here, and then do the same thing for the balance sheet. Will they balance? Well, think about that. Do you want your revenues to be exactly the same as your expenses? No, you want the revenues to be higher. So our income statement balances are $2,900 of expenses, $6,500 of revenue. And then over here on our balance sheet, they also will not balance. And we will show you soon what to do to rectify that, to get everything to balance. So now let's just concentrate on the income statement columns. So remember, the formula for net income, NI as net income, is revenue minus expenses. So we're going to calculate net income. Revenue is $6,500 minus the expenses, $2,900. And this time we're going to put the balance on the smaller side so that once we re-add the totals, the balances will be the same. So now notice we've got $6,500 of total debits and $6,500 of total credits. So now this set of columns balances. And notice we've also put the label here, net income. Now let's go over to the balance sheet columns. We have to do the same thing over here. We need to get these columns to balance. And the way we're going to get it to balance is we're going to bring that net income number over. And then let's look down here at the bottom. What's the way that we would get these two columns to balance? Would we put the net income on the larger side or the smaller side? We're going to put it on the smaller side. There's another reason that we know that it goes on the credit side. Since this is net income, How does net income affect capital? Does net income make capital go up with the credit, or does it make capital go down? Well, net income will increase our capital. So that's another reason why we know we need to put it on the right side, because net income increases capital. And which side is the increase side for capital? It's this plus side. The credit side, I should say. And then we total the columns, and now they balance. So the next slide will show you the whole worksheet and what your solution should look like. So the next step would be to use the income statement columns to actually create the income statement. And then after we create the income statement, we create the statement of owner's equity, and then we would use the balance sheet columns to create the balance sheet. So we are done with the worksheet.